While reactions to the government shutdown are pouring in across social media, across the world, and across the investment world. And here to discuss the impact on the markets and the economy, Sam Stovall, Chief Equity Strategist at S&P Capial IQ. Thank you so much for joining us again, Sam.
Happy to be here, Gary.
So tell us, we told the story about Chicken Little. The sky is falling. Investors have been running down the rails for the last couple of days. Things have been down. A little bit of a bounce today. So is this just investors catching a breath from all of this breath holding, or are there some serious long-term problems that the markets are facing with this partial shutdown?
I think it's a combination of things, Gary. First off, today is the first day of the month, and interestingly enough, since 1999, if you traded only in the first day of the month, you would have seen a gain of almost 50% versus a gain of only 15% if you were a buy and hold investor during that entire period. So we'll have to wait to see what happens in the subsequent days in October. Also, I think that investors basically are viewing what's going on in Washington as daytime drama. They like following it, but they're not going to lose any sleep over it because the primary concern is whether we pay our debts. And nobody thinks that Washington will default on its debt.
Just like any disaster or end-of-the-world movie you and I have ever seen, things always kind of start out okay, and then eventually things get really, really bad. This is the first time that this has happened, really, on this scale. Do the markets, do the banks, or the investment companies, commodities industry, is there any preparation plan for this kind of a scenario?
Well, we've had things like this before. The last time was December 16th of 1995 through January 6th of 1996. So we know that it's happened before, and we know what's happened to the overall economy. Expectations is that the economy would lose 1 percentage point of growth in the fourth quarter for each month that Congress, in a sense, has not agreed on a budget, and therefore all of those employees are out of work. So if we look back to history as a guide for It's Never Gospel, what we saw back then was the S&P did decline about 4%, but once the Congress came to a resolution, the market jumped more than 10.5% in only 1 month.
We saw a little bit of a bounce today, but if the markets do go back to trending lower, could this be a buying opportunity for investors?
I think it would be. S&P Capital IQ's Investment Policy Committee has an 1845 price target for the S&P 12 months from now, which is a high single-digit growth rate. So I guess you could categorize me as a bull with a lowercase b. But we still believe earnings are headed higher. We don't think we're going to be slipping into recession. We think that the Fed will take its time raising interest rates. So we're still in a low inflation, low interest rate environment, which is expected to be beneficial to stocks.
Now, all sides would probably agree that this can't go on forever, but how long do you think it can reasonably go along before both domestic markets and world markets pay a huge price for it?
I think that the parties in power want the country to be closed for long enough that the consumers feel the pain, so that we, the voters, get the message that we're not happy with the way things are going in Washington now. I think that it's going to possibly benefit both sides when we come to the midterm elections, but probably more so the Democrats, because most polls indicate that the Republicans will be blamed for this shutdown heading into 2014, which is a midterm election year. I think the Democrats are hoping that they regain the majority in the House.
When is the tip of that sword for the consumer to start to feel the pain in terms of their daily life?
Well, depending on who the consumer is. Those who are looking to renew their passports are already feeling the pain because they tried to do that today and were basically pushed aside. In a sense, I'm feeling it. I go onto the websites of the Federal Reserve, the Bureau of Labor Statistics, et cetera, to get interest rates, to get employment data, and nothing's going to be updated. Even on Friday, we're possibly not going to be seeing what happened in September in terms of payrolls and in terms of the unemployment report. So all of us are feeling the pain from government data just not being there.
Sam Stovall from S&P Capital IQ, thank you so much. Always a pleasure.
Thank you.
And you're watching Arise Exchange.